Good morning. This is my fifth English video in my English YouTube channel. I hope all of you, a very nice Thursday. It's a special day as in the morning in the USA, the CPI numbers will come, which may affect the Fed interest rate hike decision. 525 didn't help, so I don't know what other 25 quarter may do. But today, my video is especially for gold prices. Gold is the most disliked and very liked product depending on which country you are from. Chinese love gold, and they are the biggest producer of gold in the world, and they keep big piles of gold. However, nation-wise, government-wise, treasury-wise, let's say, the most gold is kept in the lockers of the United States, about 8,000 tons. And China is still assumed to, or reportedly assumed as, because I don't really trust the Chinese numbers, about 2,800 tons of gold. But the reality is any country who wants to have their money to be a reserve money in the future must have a couple of let's say issues that they must resolve beforehand, and that is you must have a very strong army, you must have a lot of gold to support your money. So that's the main two, and you must be an open economy. That's the third thing, because this is historically it was Netherlands, then the Britain or United Kingdom, let's say, in the past. So it kept changing hands. The reserve money also kept changing hands. And so why is gold so important? Because it's taken as a government security item. You can give it as a collateral, like a house getting a mortgage loan. You can get a loan against your gold by depositing it, for example, in London, and then all the other people can give you loans in US dollars or foreign currencies if you have a collateral gold. So gold is foreign currency guaranteed against it. You cannot do this with houses or buildings or airports, or it must be held as a mobile item. So you cannot transfer the houses, the factories, to another country to keep as a collateral. But gold is mobile, so you can transfer 300 tons, 400 tons, and then ask for a loan. You'll definitely get it. So there is no problem. So now, why all the governments, although they keep buying gold in tons, the first 30, 40 countries, I'll show you. I wasn't prepared to show you that one, but I will also show you. This, I'll just type in countries with most gold reserves. Okay, so countries with the most gold reserves, and you will see from a statistic. This is August 30. I will show you right now in this video. Okay, share this tab instead. There will be a lot of sharing on the screen today. So be prepared. Instead of my face, now you are seeing it. Okay, now this list belongs to Statistica. It shows how much gold governments have in reserves, not the people. This is government. As I told you, United States is number one, claim to be owning 8,133 tons. Why did I say claim to be? Because there are different organizations like GATA, which claim this gold has disappeared, but they are not having them inspected. So actually, the US doesn't even have this much gold at all. So those are speculations. I cannot go and count, so I cannot give you definite detail. But for the moment, let's just look at these countries. Germany, second, 3,352 tons. Italy, 2,451. France, 2,400. You see, all developed nations, they keep gold. And Russian Federation, they really need it during this war. China, shown only 2000. I believe China has a lot more. They have an agenda. So I don't believe this number. I didn't say this for France and Italy because they don't have an agenda. China has an agenda. Switzerland, 1,000 tons. Japan, 845. India, 797. These are of second quarter of 23. Turkey, where I'm broadcasting this video, 669 tons of gold. I know last month they bought another 15 tons here. Netherlands is so the list you can keep the list going down and down. But right now, what I want to show you is all the developed countries, mainly most developed countries, keep the most gold possible. Okay, so we agree on that. There's no problem there. Now we are thinking, why do these countries keep carrying this gold, and why should I invest as a person? You know, as a person, they claim it's equivalent of a tin, which is worthless. So why do you keep it? Well, I'll show you if it's worthless or not, so you decide. Currently, I reported right here. It's not by cents, but it's while I'm doing this video, the gold is around 1881 US dollar per ounce. We have seen 2,200 US dollars. I'll show you that one as well. And silver to 22 US dollars. I've seen 45 US dollar silver in my not lifetime, like 10, 15 years ago at most. And gold was there about 2-3 years ago. But the main idea of this is these numbers are fake numbers. Why are they fake numbers? Because these are nominal numbers calculated in US dollars. And US dollars is a depreciating asset. So you cannot compare something. It's a measure of one, let's say 1 feet, but 1 feet is with a rubber band. It's going short, it's going long, it's going short. So how can you measure something with a rubber band? You know, you can't. It has to be a fixed asset. And US dollar just lost its value. The previous year, 9%, right now at 5%. So only in 2-3 years, it lost almost its 20% in value in a couple of years, not like before. Even if we accept that it comes back to the objective of Fed, they claim 2 and 2.5% is the right place. Every 10 years, it means 20% of US dollar is gone. So if you're owning $100,000 and in 10 years, your $100,000 will have purchasing power in best conditions that Fed is offering you, $80,000 purchasing power. So why don't we accept the values that are in the market? We do. It's the market price. And maybe it's a gift. So I don't complain. I keep buying. I'll explain you why. Now let me go back to another chart which shows you the gold prices. Let me see the share tab. Okay, I'm sharing it right now. This tab belongs to gold prices from Macro Trends website. It's the historical 100-year historical gold prices in US dollar ounces. Okay, and it's October 11. They calculated it as 1875. Today is 1881. Today is October 12th. So in a day it changes, but they keep it up to date. So here we are seeing the all 100 years value before even like this year's right here in 1915 is here. Okay, it was $600 nominal. It came down to $300. The gray sections show the recessions. Okay, you can see how it goes during recessions up. You see, before recessions and after the recessions or crisis, let's say, now it's going up during the recessions and it's coming down after the recessions. So these are very long term, but I want to see us the long term because this is $600 here in 1915 and here it's at $2,584 in 1980. Okay, so it went up considerably from here to here. Okay, so it's like 10 times in US dollars. Fine, it came down to $488 in year 2000. So since year 2000, it's almost went up to 2,235 US dollars in October. Now we are in October as well. 2011. Okay, this is 12 years ago. And then it's making a curve downwards and then upwards starting here and then downwards in the middle of this line. So these prices are all in US dollars. Let's not forget that. And the US dollar here is not worth anything close to this, because I will just do a calculation in the US official inflation calculator, nothing that I made up. Okay, so $2,335 in October 2011. Now I'm going to that official site. Now I will share that tab with you. Making sure that tab is shared. What you will see in this tab, this belongs to Bureau of Labor Statistics of the United States. You see, it's official, BLS. It's a CPI, Consumer Price Index inflation calculator. Okay, so I cannot have a more dependable inflation calculator than this. What I did, I entered the price of, I said August, I can say October, it's no problem. 2011, the gold was $335. Now I'm saying in August, they don't have the further numbers of September, so it ends in August. I just press calculate, and as you see, this gold to reach the 2011, it must come to 3,166 US dollars just to match what it did in October 2011. I didn't go further. Let's go further, make another trial. Let's go to the year 2000 with the same chart. Okay, 2000, it was $457. And let me come back. $437. When 2000, year 2000. Okay, let's see what it's worth today. That's another calculation. It's only 771 US dollars. As you see, this is oversold and that one is overbought prices. So now let's do another trial. I picked the bottom here. Let's pick another price just to see how confusing this becomes. Okay, and okay, let's go to 1931. 31. It was $801. Okay, 1934. Okay, 1934. I got 1934. $801, right? $801. Okay, now calculate. Okay, now it had a value of $18,216 today. 1 ounce of gold. So now you are totally knocked out, let's say. How can we check it like this? Okay, now I'm just giving you the facts. I'm not giving numbers from here and there. And I showed you a different number from 2000 and the increases that happened in the past. Now, let me explain you a new and another idea. These numbers are all inflationary. That's why I calculated in inflation. But if I go to another site, which is goldprice.com, which I'm sharing you with you right now, I told you there's going to be many shares. Okay, in this video. Okay. Now, this one shows the current prices. Right now, it's $880.75 and an ounce, and this is $22.16. This is silver. So this is for 1 day. If I want to change it to like 30 days, I can see how gold performed, came down from 1920 all the way down to 1820, $100. That went back up another $60, okay, as of today. So we can extend this 30 days, 2 years. Okay. Now this is your 2 years chart. Almost always in 1800, down a little bit and up a little bit, okay, in 2 years. Now we can check it in 10 years. We can see that it's going up because this is nominal US dollars, okay? That means no inflation, nothing is adjusted. So these only tells us about the past of the gold. How do I make money? Does gold make money? Okay, the above is in Turkish lira. It does not, it only affects Turkish people, but I will show you on this right-hand channel, you can check the gold increase in TL in 6 months, 48%, in 1 year, 63%, in 5 years, 674%, and in 20 years, about 100 times, okay, gold increase in local Turkish lira terms. This is due to high inflation. If I convert it to US dollars, which you can choose from here, US dollars, now in the 1 year, it went up by 12, almost 13%. In 5 years, it went up 54%. In 20 years, it went up 406%. Now, this is more meaningful for you. I can check the same for silver for you. So silver prices went up in US dollars during the year 16%, more than gold did, okay? You can check daily and 30 days, but it's not investment 1 or 2 day or 6 months, 3 months. Real investment period for me is 5 years. This is 50% increase in the gold price, and 20 years, 351%. So if somebody tells you the price didn't go up in nominal terms, you can definitely say, look at just this page, it shows you, okay? Now, let's come to reality of the past 15 years. Let's not go all the way down to 1930s. This charts show you, there's an important charts in this listing. It shows you gold, silver price by the minute, and it shows you platinum, palladium, as well as oil prices, US dollar, euro, which affects the price of gold, Bitcoin as well, and it shows you the gold silver ratio also. Here it is, 84. 85 silver coins, silver ounce coins equal to 1 gold coin, okay, 85 times higher. So this number moves between 120 and 60, I can tell you, in the recent years. But I don't want to go into that at the moment because for us, the gold and silver are both moving in the same direction, only at different speeds, okay? Now we want to check this chart also covers 30 years and all in nominal towers, which does not mean much to me. But the 15 years returns in terms of all currencies at the bottom of this page are very useful. Like you can see, if you are investing in US dollars, in 2008, right after Lehman Brothers, it went up 5.6. Then next year, 23%, 29% in 2010, 10% in 2011, 7% more in 2012. So overall, right after the Lehman Brothers crisis and the mortgage crisis associated, it went up all the way down like almost 70%, let's say here. Then it came down because of overbought situation, I can tell you. Everything is oversold and overbought, it means. Then it corrected itself. then again increase, then again slight fall in 2018. This is a 20% and 24% in 2 years increase in 2019 and 2020. This is when the cervix's sickness disease came out, okay? And it went up. Then it came down, slight corrections, and this year so far, it's up 2.5%. Now, this average is very important. In US dollars, so far, gold made 6.1% per annum. If we take the losses and winnings, this is important because on average, US stock indices also make only 6 and 7% if you don't keep changing your stocks. Otherwise, it's a statistic that most people make close to 2% because they keep selling and buying, okay? If you had kept it, you would have made 7%. But as you will see, these averages changed drastically from 7.7 to 8 to 6.1 to 11%. Why is it 11%? Because it's India and Japan. And you know, last year, Japanese money lost so much value, while US dollar-wise, gold only gained 2.5%. In Japan, it gained 17%. So if Japanese had invested in these 2-3 years, as you see, there are no losses, continuous 20. So Japanese women, saving women and men are saved from all that inflation, which is not shown. You know, Japan always reports 2-3% inflation. They made huge amounts of money, okay, instead of staying in their own currencies. Their money never returned 18-20%. So even with gold, if we are comparing countries, I will also show you the euro because there are many people from European. This is Australia, Canada, Swiss franc, and China, and Europe is here, and United Kingdom is here. So Europe is 8.3% per annum. British, UK, United Kingdom, 9.7% annual average income from just keeping gold. So gold is not giving any additional payment. It's not giving birth. Well, do I care if I'm making 9.83%? So if something is giving dividends and it's still under 9.7 or 8.3 with dividends, I don't care. Whichever gives me the more money, that's important. Dividends are just fooling your own, okay? You are fooling yourself if you are checking just the dividend because dividend is giving birth. It's like houses giving rent. It's not just the rent. You must check the house price also going up. But if I can beat the total income, including rent and the house price, in, let's say, gold, then I can say gold is good. But I won't, because I have other investment ideas where I made 3-4 times much as gold, okay? And not in the stock exchange, not in dividends. I will let you know, okay? I made the big money. Let me see, okay. I made huge amounts of money in investing in inflationary countries, buying houses on credit, mortgage. So the higher the inflation, the better the gains, because the amount of credit you took from the bank is melting by itself without payments. I'm not considering payments. So imagine you have a loan in US, and this is not much talked in the US. You have a loan of $300,000, okay? And just put it into the government of labor statistics, same amount, you will see that you already made $30,000-$40,000, you know, additional, because the value of US dollar is melting away, okay? So this is not considered in any of the graphs and anything. I will show you one final graph, and before I close, this will be inflation adjusted gold, okay, price graph. Okay, inflation adjusted, I will show you one which is not coming all the way up to today, because I didn't really I didn't really check it out, but I will just show you how it turns out to be in the long run. Let's see this. I'm familiar with this one, which ends up in 2015. So I will just show you that one. Okay, I'm just familiar with that one. So it's in gold price again, but you have to write down inflation adjusted to see this one, and they are discontinuing it. They are not showing this this anymore. So I'll just move down and to show you that area. Okay. Now you see, it was $1,000 in 1970. In 2015, it's still $1,000 in purchasing value. Okay. And here, as we calculated, it went up to $9,000, $9,500. So it's down at the bottom at $1,000 with the current or 2015 prices. Let me check shortly what it was in 2015. So just to give you an idea, because I'm using different charts from different. It was $1,500. Okay, so in $1,500 today, it ended up about 1,000. Okay, so about one third is gone at that date. So going back to my case, you can make money on gold in long term, protect yourself. You don't have to invest everything in gold. Depends on your security concerns. You can deposit one tenth of your investment, or you can go up to 90%. If there's a war coming to your area, like Syria, Lebanon, you would be lucky to have physical gold instead of anything else. You know, owning companies, houses, buildings. You rather own physical gold. It's like Bitcoin, but transfer takes time, not so quickly, you know. But if you can transfer it to where you need it, so you cannot take it on the airplane. But I can tell you, the Russian oligarchs transferred tons and tons of gold running away from Russia, you know, by private planes. Okay, so this is a insider info. Okay, insider information. So basically, from pilot friends. So basically, the gold is a security hedge. Now, do we need security today? Locally, internationally? Well, I know in US, people are stockpiling in their houses various guns and ammunition, and have 5 to 6 safe storages. They put one, spread their gold, and why they have 8 of them underground. So if it's found, if somebody comes, they waste time. It's similar to prehistoric times. In Turkey, in Manisa area, or in Middle Anatolia, close to Ankara as well, there were some graveyards for the kings. They are called tumulus, you know, which are like pyramids, but not cornered. They are just, you know, loaded ground. So it looks conical, but not like a pyramid with size. It's not stone. It's made of soil. And the biggest one in Manisa area is very big. Almost the surrounding circumference is bigger than the biggest pyramid. Okay, and the reason they have that area is called 1,000 hills, so bin tepeler. Okay, 1,000 is where the first gold coin in the world is printed. Okay, and these where these let's say graveyards of the kings are. They also made fake graveyards. So if people come to steal the fortunes from the graves, they have to dig a lot to find the real grave. Okay. So similarly, they do buy many safes at home. They don't trust the banks and others and paper, other names, you know. So gold is and I cannot say, is this safe that way or this way, or thieves will come, or other thieves will store through inflation. I don't know which thief you prefer. But in my way, I would always keep some physical in different locations and different forms. Okay, so this is your last minute pocket money. So depending on that, with the remainder of the money, where I made my biggest money is I will tell you in the next title, in houses with mortgages. Okay, and where I made huge, I tripled and quadrupled gold prices. So because it's using a leverage. You cannot use a leverage in gold. You can use it during forex daily leverage, but not a 10-year, 15-year, 30-year leverage. That's only available in houses. So next one will be on houses. See you all later, and happy Thursday, and we'll see what happens in about 4 hours. No, it's 12 o'clock. 3 hours and 3.5 hours. What happens to the inflation of the United States? See you all. Bye bye.